strategy that will take your trading to the next level. So if you are new to the channel, please hit the subscribe button and don't forget to hit the notification button so that you know exactly when you upload new content. So by textbook definition, what is moving average? So a moving average is an indicator that is applied to your charts that helps smooth out price by removing the fluctuation surrounding the price movement in question. So don't stretch your head trying to memorize this definition, because what we are going to teach you in this video is more important. That is how to use the moving average is more important than the actual definition. So let's get into it. The moving average that we are going to use in this video is the 50 moving average, which is the 50 period moving average. So a moving average is a free indicator across all charting solutions. So this is MetaTrader 5. So you go on to insert and indicators, then on trend you search for moving average, then period should be 50, method exponential applied to close. So here you have it. We now have a moving average on our chart. So before we go on to how to use the moving average, let me tell you about our online forex trading course, which is the ultimate guide to forex trading. In this course, we will teach you the trading foundation. That is, we cover all the basic trading knowledge from beginner up to end, so that you can easily apply the concept that you advanced concept that we will teach you in other sections. We also teach you advanced price action, that is price action techniques, price action techniques and concept to take your trading level to the to the next level. In this course, you also learn swing trading strategies, that is advanced swing trading strategies that are focused on medium term trading, and also you will also learn day trading strategies, so that it will be on your own to discuss, not to to make a decision on whether you want to be a swing trader. That is swing trading is meant for traders who are more passive style of trading, which means you have limited time or to take the charts. So but on day trading, its focuses on fast and medium fast and short term trading. So which means it is caters for someone who has more time on the charts. So let's get back to the moving average trading strategies. So but please note, we never use indicators on their own. Please note, guys, we never use indicators on their own for trade analysis or trade entries. We only use them to confirm to confirm and support what we have already established by price action. So why do we use moving averages? Moving averages can help to confirm whether bullish or bearish or even a sideways market. So what do you mean by this? When moving average is below price like this, it shows that we are in a bullish trend, or we are in a uptrend. Then when the moving average is above the price like this one, in this scenario, it shows that we are in a downtrend, in a bullish market. And also we have cases when moving averages are always cutting across price like this. It shows that we are in a sideways market. And also we use moving average, particularly the moving average period 50, to signal a possible trend change. Take note keyword, possible trend change. And also we can use the moving average as support and resistance. As you can see, in this case, it is acted as resistance. And also we use you should also note these are ideologies and not the law. because we do not use like I've alluded earlier that we do not use moving averages on their own for trade entries or trade analysis, but we pair them in what we already have been established by price action, which means you can add moving average on top of your existing trading arsenal. So let's get into it. How to use moving average period 50. There are two ways of using moving average period 50. The first one being trend continuation. So in this case, as you can see, price broke below the moving average period 50 to signal a downtrend. As you can see, we're now in a downtrend. Then price came back and hit the moving average. So it is acted as resistance, and at the same time as we can use it to signal a trend continuation. How can we do that? How can we know that if it has hit this area, it is going to the trend is going to continue? So we can do this by simply as you can see here, we have our resistance zone. Then we draw a trend line, a short-term trend line like this. So we do not immediately enter a trade as soon as it is this moving average or this resistance zone, but rather we need extra confirmation to enter our trade. So how are we going to go to get an extra confirmation? We're going to get an extra confirmation in the form of this short-term trend line. As you can see, this trend line was broken here. So this now is our entry point. This becomes our entry point. So once again, let me repeat: the price broke this below the moving average to signal a downtrend, and then it went back to retest the moving average. So we can see that this was a break and retest formation that was formed here. So once price hit, you can see, if you are to, you can see that price started showing signs of resistance through this candlestick wick, so that you can see that this price was resisted. So we draw a short-term trend line on the previous low. So once if the trend line is broken, we enter our trade. So if it is not broken, we do not enter any trade. So as you can see, we had our entry here. You can enter here, and then your stop loss will be here on the previous high, or be above the moving average. So let us go now to this scenario. In this case, you can see that our price went and hit this moving average period 50, and as you can see that the signs of resistance were shown by this wick, by this long wick candlestick. So once again, as you can see, let us insert a rectangle here, so that you see that this, you can see that this area. So you can see that this was once used as support, and it is now used as resistance. So it is support that is turned into resistance, this area. So it shows that there is a possible trend change with, that is this short-term bullish trend. So you can see that it was a short term. This short term was coming to an end through this support that was turned into resistance. So this, you can mark it as a rich area. So once again, we draw our trend line, our short term trend line. We are calling it short term trend line because the long term bias is confirmed by this moving average. So we can see that we are in a downtrend. As long as the price remain below the 50 period, it shows us that the market is in a downtrend. So this uptrend was a short-term uptrend. So as you can see that we have our nice let me write. Now we have our nice trend line. So once this trend line is broken, we enter our trade. So as you can see that we can have our nice entry here. We can enter here, then eat all these profits. Our stop loss can be above the moving average. As you can see, we're nowhere near being stopped out, as you can see. So in this case, this moving average was broken here, but you can see that although it was broken, this area, it never broke this area. So this was never a good entry, as it failed to. Let me draw this so that you can clearly see. As you can see, this area was acted as support, and then this. So as you can see that this area never confirmed any trend change. As you can also see, the sizes of the candlesticks can tell you whether the trend is changing or is still continuing. If the candles are in the opposite trend are becoming bigger and bigger, shows that the trend is about to change. But as you can see that there was momentum loss as these candlesticks were getting smaller and smaller. So it shows that the market is not ready to change direction. It was just a force breakout. As you can see that this one is a force breakout, as this is characterized by small candlesticks. So as you can see, our short term, our bullish market still continues. So our entry again, you can enter our trend line. Then as you can see, this trend line was broken, we enter. So let me now look for a trend change. So as you can see here, we witnessed a trend change. So as you can see that these candlesticks are becoming bigger and bigger. So it shows us that there is now a trend change. And you can see that also the market was sort of consolidating. Let me show you what I mean so that you can get this right. As you can see here, the market started consolidating. So it is a different scenario. In this case, you can see that the market was making lower lows, but all of a sudden it stalls and started consolidating around the 50 period moving averages. You can see is evidenced by this rectangle. So this shows us that the market was changing. There was a trend change that was going to okay. So once it happens, as you can see, we wait for a break and retest so that we can use the concept of break and retest to avoid being stopped out. As you can see, it breaks, so we wait until it retest the moving average. As you can see, this was a false breakout as the market was preparing to take off in a uptrend. So we also draw our trend line, that is our confirmation. Okay, so if you are to switch to a smaller time frame, you can notice that there was a break and retest on this trend line. As you can see, this trend line was broken, then it was retested and a bullish engulfing candlesticks okay, then the market took off. So we could have been in our uptrend up to now. So in this guys, this is how you can use the moving average period 50 to your advantage. So if you have found this video useful, please don't forget to smash the like button, share it, subscribe to our channel, and also don't forget to check out our ultimate guide to forex trading course. The link is in the description, and also the links to the brokers that we use and recommend are in the comment section. See you on my next video.